After watching my previous video, some of you reached out with more questions about T-bills. So I created this video to explain some of the basics. In this video, I will talk about the top 8 things to know about Treasury bills and why I prefer new issue T-bills instead of trading them on the secondary market. If you're already familiar with T-bills, you can skip to the part where I talk about why I prefer new issue T-bills. Hi there, I'm Avanti. I'm a mom, an investment analyst, and a CFA charter holder. Subscribe to my YouTube channel and follow my Facebook page to learn how to build wealth through investing. So here are the top 8 things to know about T-bills. Number 1, T-bills are short-term debt securities issued by the United States government. In simple terms, when you buy a T-bill from the government, you are loaning the government your money to use for ongoing expenses, such as building a highway, keeping streets clean, buying new army equipment, paying employees, and so on. In exchange, you receive a promise from the government that you will receive your money back at the end of the T-bill term or when the T-bill matures with interest. Number 2, T-bills are short-term securities with maturities ranging from a few days up to 1 year. This is the treasurydirect.gov website. As you can see, there are bills with maturities ranging from 4 weeks to 52 weeks. Now, if you look at the tentative auction schedule, you can see that the 4-week and 8-week T-bills are offered each week. Except for holidays, they are announced on Tuesdays, auctioned on Thursdays, and issued on the following Tuesday. The 13-week and 26-week bills are also offered weekly. They are announced on Thursday, auctioned on the following Monday, and issued on the Thursday following the auction. The 17-week T-bill is a more recent introduction to fill the gap between the 13 and 26-week T-bills. These are also offered every week with an announcement on Tuesday, auction on Wednesday, and issued on the following Tuesday. 52-week bills are a little different. They are offered every 4 weeks with an announcement on Thursday, auction the following Tuesday, and they are issued on the Thursday following the auction. For holidays and special circumstances, the days are different. You need to put your purchase order in before the auction. I usually like to put an order a day prior to the auction because each platform that you can purchase on will have slight differences in deadlines on auction date. Number 3, the interest is paid at maturity. Maturity is the term of the T-bill. For example, the maturity of a 4-week T-bill is 4 weeks. The maturity of a 52-week T-bill is about a year. At maturity, you receive your interest and the purchase price back. The purchase price is what you pay to buy that T-bill. The total amount you receive is called the par value. There are no other interest payments or coupon payments made during the term of the T-bill. Before I move on, I'm obligated to remind you that T-bills are not for everyone. You need to do your own research to determine if they meet your investment objectives and suit your investment and risk profile as an investor. Evaluate your investment plan to determine if they are right for you. If you don't have an investment plan, you can watch this video to learn how to make it. I have also linked my personal template in the description. Number 4, you can buy treasury bills or T-bills on many different platforms and accounts. You can buy them directly from the government through your Treasury Direct account, or you can buy them through a bank, broker, or dealer. Treasury Direct is the official platform of the United States government. After you create an account with Treasury Direct, you can buy different types of marketable securities. such as T-bills, treasury notes, treasury bonds, etc. One caveat here is that when you buy a security directly through Treasury Direct, you must own it for at least 45 calendar days before you can transfer or sell it. Another caveat is that you can only bid non-competitively, and I'll explain what that means when I talk about how to buy T-bills in another video. The 45-day requirement does not apply to securities purchased using proceeds from a maturing security. When you buy through your bank or broker, some brokers may allow you to place either a competitive bid or a non-competitive bid, but not both for the same auction. It doesn't really matter as a retail investor. I have only used non-competitive bids. Again, I'll explain what that means when I talk about how to buy T-bills in a separate video. Major brokerages offer new issued treasury bills for no fees. Check Fidelity, Vanguard, Schwab, etc. If you're planning to buy T-bills in an IRA or an individual retirement account, you have to buy them through your broker because Treasury Direct does not offer IRAs. If you've already bought T-bills, please share with the community what option you used by typing a comment below. When you buy T-bills non-competitively, you will not know beforehand the price you will get for those T-bills. If you're buying through a broker, you may see an expected yield or an indicative yield, which may be close to the actual yield that is only determined at the auction through competitive bidding. Before I move on to the fifth thing you should know about T-bills, please give me some love by hitting that like button and share this video with one person who may get some value out of it. And if you're new here, please subscribe and hit the notification bell so you don't miss any of my videos. If you're watching me on Facebook, don't forget to follow my page. And please comment below what you like and what you want to hear more about in my future videos. Also, to help educate you about the stock market, I created this free course on the basics of stock market investing for beginners, so don't forget to check it out. Number 5, if you're interested in buying T-bills, $100 is the minimum purchase and your purchase amount needs to be in increments of $100 if you're purchasing through Treasury Direct. Through a broker, for example, Fidelity or Vanguard, your minimum purchase of T-bills is $1,000. The maximum purchase is $10 million, which is a lot for retail investors. Number 6, taxes. There are no state or local taxes on the interest you earn. However, you will owe federal tax. If you own T-bills in a Roth IRA, you don't have to pay any federal tax. And that's my preferred account choice for owning T-bills. Number 7, Treasury bills are practically credit risk free. This means you're guaranteed to get your purchase price back with interest at maturity. This is because T-bills are backed by the full faith and credit of the United States government. Unless the US government starts defaulting on its debt, you can consider these as risk-free investments for practical purposes. There is, however, interest rate risk, which means the value of T-bills fluctuates with interest rate. Number 8, you don't have to hold T-bills to maturity. These are highly liquid instruments and trade on secondary markets. You can sell them through your bank or broker if you own T-bills in those entities. If you own them in your Treasury Direct account, however, you will first need to transfer the security to a bank or broker and then place a sell order. But note that if you sell your T-bill before maturity, the value of the T-bill could be higher or lower than what you paid for it. This is because of interest rate fluctuations. Also, your broker may charge a fee through the bid-ask spread. This fee may be small, but your broker is not going to trade your securities for free. Finally, I want to tell you why I prefer new issue treasury bills instead of buying them on the secondary market. you have the option of buying a new issue T-bill. This is when you place a purchase order before auction date. Or you can buy an already issued one after auction date on the secondary market. When you buy an existing T-bill through your brokerage on the secondary market, the price you pay is slightly higher because of the bid-ask spread. And when you sell, the price you get is slightly lower. That's because your brokerage will want to make money off of your trade. So personally, I don't find value in trading T-bills on the secondary market. Also, many of these different maturity T-bills are offered every week, except for the 52-week T-bill. So they're always available at competitive prices. Go watch this video next, where I discussed a simple T-bill ladder strategy that will make money in a rising rate environment. And if you found any of this information to be of any value, please like the video and share it with one other person who you want to help. I want more and more people to start investing for their family's future. As always, don't forget to be happy, to be kind, and to be your best self. Bye.